enhanced trading experience. We'll explore the basics of UTA today. UTA is a revolutionary trading account that combines spot, futures, and options into a single account. Let's look at the benefits of UTA. 1. Significantly improved capital efficiency. 2. Multi-margin mode to select. 3. Customized collaterals. Benefit 1. With UTA, you can optimize your capital usage. For example, you may earn $1,200 on trade spots, but lose $1,000 on derivatives. In a classic account, spot and derivatives are managed separately. This means that if your margin for derivatives falls short, you risk liquidation. However, with a UTA account, profits and losses from spot and derivatives can offset each other, reducing liquidation risks. Benefit 2. You can choose from 3 margin modes, each designed for your level of trading. 1. Isolated margin. This mode isolates the risk of each position. A mistake in one position will not affect your entire account. For instance, if you hold USDT, USDC, and BTC, all these tokens can be used as margins for USDT perpetual contracts. 2. Cross margin. In this mode, more than 100 types of collaterals can be used. 3. Portfolio margin. Designed for professionals and complex strategies, this mode requires less margins for hedged positions. Benefit 3. With UTA, you can customize collaterals to include or exclude specific assets. It allows for improved capital efficiency by adding more assets as collateral. You can keep your spot assets safe by excluding certain assets. Unleash your trading potential and experience the benefits of UTA.
Ready to claim your share of 1 million MNT? Well, here's how. All you have to do is complete tasks to earn points, and then you can climb the leaderboard. Or you can throw your points into a lucky draw and earn prizes on a daily basis. We got 5 rounds, and each round, the prize will go up. So, ready to claim your share of the prize? Join now.
Hey everyone, welcome to the 22nd Learn livestream session. I'm Sabrina and I'm your host for today. I have with me Shun Yet, Head of Derivatives Business and Institutional Sales at Bybit. Would you like to introduce yourself first?
Sure, it's a pleasure. Thank you, Sabrina. So I'm actually new to the crypto world. I've been trading for a few years. I've been in the TradFi world forever. So I'm 50 years old. Been a trader for most of my life and also in quantitative trading. And I think it's very exciting to be part of the crypto ecosystem and being part of Bybit.
Nice. And next up, we also have crypto KOL Dusty BC joining us today. Hi, Dusty. It's great to have you with us. For those who might not be familiar with you, could you just give us a quick introduction and tell us what you've been up to lately?
Yeah, so I see I'm lagging a little bit. Is that also for you guys on that side just now? Or it's all fine?
Yeah, just a little, but yeah, no worries.
Well, hopefully the audio is still okay. I'll try to fix it in just a second. But yeah, Dusty BC, Crypto KOL, cover crypto news every single day over on YouTube, X, Instagram, TikTok, you name it. And happy to be present today and talk about exactly what we're going to talk about today. A lot of exciting topics on the line. So
yeah, great.
Yeah, happy to get started.
Thank you both for being here today. We've got a huge topic lined up, like what Dusty said, one that's making headlines across the crypto world. The US is looking to create a crypto strategic reserve with Bitcoin, Ethereum, Solana, XRP, and Cardano being part of the mix. But what does this actually mean? We'll be breaking it all down, why these 5 cryptos were chosen, how the market reacted, and most importantly, what traders should do next. So if you're wondering whether this is the start of something big or just another short-term pump, you're in the right place. And of course, we've got giveaways coming your way. So make sure you stick around. All right, so we'll be doing 2 rounds of red packet giveaways today, one for our existing users and one for our new users. You can stand a chance to win a share of 500 USDT. All you need to do is click that red packet once it appears, fulfill the requirements, and you'll be able to claim your reward. All right, and if you haven't already signed up for a Bybit account, what are you waiting for? Sign up now so that you can get ahead of the game. And while you're at it, like this video, share this stream out, and let's just get started. So the US government is making waves with its plan to create a crypto strategic reserve, starting with 17 billion in Bitcoin obtained through legal seizures. The idea is to position the US as a global leader in digital assets and integrate crypto into the nation's broader financial strategy. But is this really a game-changing shift in policy or just a controversial move that benefits big crypto holders? And most importantly, what does this mean for traders and investors? Is this the start of something bigger or just another short-term catalyst? Let's dive right in. So we've seen governments build strategic reserves for oil, gold, and even food supplies in times of crisis. But does crypto really belong in that category? Some believe that this could legitimize Bitcoin as a national asset, while others argue it's a risky bet that could expose taxpayers to unnecessary volatility. If this reserve is actually going to work, what needs to be in place for it to succeed? What do you think, Dusty?
Yeah, sorry. In the meantime, I'm just trying to figure out exactly how to get this thing to be a bit less laggy. So could you repeat the last part for just one more second?
Yeah, so some people believe that the crypto reserve could actually legitimize Bitcoin as a national asset, while others argue it's like a risky bet, right? It could expose taxpayers to unnecessary volatility. So if this reserve is actually going to work, what needs to be in place for it to succeed?
Well, I'd say that to a certain extent, you might, I think everybody would have to agree that it might open up these risks for every single investor, or actually every single taxpayer, because obviously there is volatility involved. Then again, there is an argument to be made that it actually would be better to just hold the Bitcoin that they have in the reserves right now than sell them based on historical price action. So I think one of the main examples they give is that they lost out on, how much was it? Now, $17 billion. I'm not so sure the exact amount of profit, I guess, because of selling too early. And I think their main aspect, the main proponent for why to hold it this time around is to prevent this from happening again, or expanding, or this gap basically to expand. So from that angle, well, I would say selling it now gives you a benefit, sure, because you have some extra money. But then again, the potential that it could bring into the future, I'd say obviously it's a risky bet. It's an investment still, but I guess from the taxpayer's perspective, if the government thinks it's a good choice, well, how busy are people really with thinking where they spend their money, or where they, I should say, invest their money? What are usually the returns? How safe are they usually? Perhaps really when you start diving into what the usual investment strategies are like, it's actually not even that bad for a risk to reward perspective, not volatility perspective.
Yeah, that's actually quite insightful. And the reserve announcement triggered a quick rally, but the market wiped out those gains. Some believe this is just noise, while others think it's part of a bigger trend. If you're a trader, what key signals should you watch to know if this move has long-term potential? And if you're a long-term investor, is this a moment to accumulate or stay cautious? What do you think, Julian?
Okay, so I think it's there was a lot of anticipation initially when Trump sort of appointed a crypto czar, and the run up to it. And I think the announcement was sort of a slight letdown because it was thought, I think Trump made it clear that this is sort of seized assets, and other ways of getting into the assets will also be sort of in a neutral fashion. So I think it won't be like we're going to raise a lot of money. We're going to use current other assets like US dollars or other assets to buy Bitcoin. So it just says like this is sort of, and we were talking about the strategic reserve. It's a little different. I think oil and food supplies are sort of strategic in that if there's disruptions in the supply chain or anything else, this is to make the country safer and as a buffer. And gold is a globally recognized sort of commodity that's been around for thousands of years. And I think Bitcoin sort of serves as that. And I think that's been legitimized by the U.S. government, and also I think other countries in the future. And now you were talking about trading. I think the trading for this is that we're waiting for more information, about how other than that, it's in a reserve, which is a positive sign. But I think the anticipation of what Trump was going to do was much greater than this news just came out. So I think there will be more information that comes out as the crypto SAR and the Trump government decides what they want to do going forward.
And because there's like a rapid reversal of crypto gains after the tariff announcements, it highlights the sensitivity of digital assets to broader economic policies. What does this volatility indicate about the current maturity and stability of the crypto market? What do you think?
Okay, well, there's a few things that's interesting is that I think Bitcoin is, and a lot of the crypto assets are actually more correlated with US tech than it is with gold. So I think the whole thesis about, I do believe in Bitcoin as an asset, but the fact that it was more of a diversifying asset similar to gold, it seems like it's not going the same route. So I wouldn't say that it doesn't deal with the maturity and stability of the crypto market. The value of Bitcoin has remained relatively stable versus a lot of other assets. But as a diversifying asset, it hasn't played out.
Okay. And while the reserve aims to strengthen the US position in the crypto market, some critics argue that government intervention could undermine Bitcoin's decentralized nature. Maybe Dusty, you could take this one since you were talking a bit about risks. So what are the potential risks and benefits of such a strategic reserve from both economic and ideological perspectives?
What the risks would be? I mean, the risks, theoretically speaking, with any investment are off the chart. There's so many risks involved, so it's kind of hard to give a straightforward answer on that. So if we're talking economically, obviously the volatility could result in some sort of loss in trust. Let's say, for example, they do decide to push for this reserve and push for maybe even altcoins on it as well. If there's any sort of issue technology-wise with Bitcoin as a network, or with any other network for that matter, perhaps again, if it expands to altcoins, if there's any sort of fraud allegation later on against one of these companies, it all reflects back to what the major announcements have been. For example, from Trump's side to really support it heavily, saying, hey, we want to get this done, we want to get this reserve in. I'd say a very big risk is the sort of loss of trust, or loss of maybe you can call it investment insight trust, in the sense that your government knows best what is next up, or what the next big thing is going to be. And perhaps, again, if there's some sort of fault, albeit for a few weeks, a few months, or a very major crash, perhaps there could be a bit of a blame game. Just like now we saw with Malay, a very different situation. But you see now, even though it was not really his fault, he might not have too much to do with the actual underlying fault right there. The claims of, oh, you're not worthy of the role were very significant. I'm thinking that could be a very big part in this sense. Just again, price going down, loss in Trump, loss in administration. I think that's very clear. What was the second part you said?
What are ideological perspectives?
Loss or a risk for ideological perspective. I'm not so sure in that sense. I'm not so sure how I should see that.
What about you? Do you agree with what Dusty has said?
Well, actually, so Bitcoin is already, it's sort of like gold, right? The US government actually banned people from holding gold a long time in the past, and only the government can hold it. I don't think that the way that Bitcoin works can do that. I mean, just because the US has a larger proportion, I think, looking at the government, someone said it was in the US, UK, and then North Korea has the, top 3 in terms of Bitcoin holdings. But that doesn't take away from who's going to hold it and who can own the assets in the future. So I don't think it changes anything from that. And I think it is good to have a government that is holding it and actually, so.
Okay. On that point, we've seen a mixed global reaction, right? El Salvador made Bitcoin legal tender, while countries like the UAE and Switzerland have taken a more strategic approach, with the US now signaling interest in a crypto reserve. Could this trigger like a domino effect? Or which types of governments are most likely to follow, and which ones do you think will stay more cautious? Maybe you should.
Okay. Well, I think we could. We're opening offices everywhere in the world. We're getting regulated everywhere. I think it's the ones that are more crypto friendly will probably adopt it earlier. But I think that's not the most important part. It doesn't, as long as the environment for the country, like, if I was in any of the many jurisdictions that exist in the world, I could easily convert from Bitcoin to USDT or via some exchange and swipe Bybit card and everything works. So I don't think it really matters if it's legal tender or not. As long as the ecosystem exists in that country to support it, then it already achieved what it needs to do.
And Dusty, do you think that more countries would also create their own crypto strategic reserve following the US?
I think so. I think the first step will be this legalizing of sorts. I believe yesterday, or maybe even today, we saw an announcement of Pakistan doing a lot more to adapt this cryptocurrency realm. I think also they could be, in relative terms, a little bit of a race where everybody wants to not be the first, but not be last as well. So many will follow in the footsteps of the US. But I like what Chinyet just said. It doesn't really matter that much for people that are in a jurisdiction already that is neutral or slightly positive towards it, because if you've got a thing like a Bybit card, I must admit I use it a lot. If you can spend it anywhere, it doesn't really matter how friendly they are towards it. It matters more for the citizens, I guess, or maybe perhaps residents. But for people who are already in a neutral territory, I'm not so sure if it really changes that much. Maybe tax-wise, sure, but spending-wise, actually using-wise, I think that's a good point. Maybe not that much.
Yeah. And, could the establishment of a national crypto reserve lead to increased regulatory scrutiny or more favorable regulations for the crypto industry? Dusty, would you like to take this one first?
So, no, I think it's a double-edged sword. I mean, right now in the US, for example, it's all going kind of pretty much tied together with a new SEC, new crypto czar, new everybody, together with new policy on the other board. It could also be, for example, in a country like, again, Pakistan, where, hey, they're opening up their crypto policy whatsoever, where now a politician could come in with a new proposal to get a reserve going, which could, again, fire back on, in a positive sense, on this previous proposition of being more open towards crypto. But it could be both sides. It could also be that a strategic reserve is only the result of new policy being made. It could be the opposite side. I mean, it really depends, I think, on the country and who you have spearheading it all.
And Shunyet, do you think that this would change how institutional investors view Bitcoin? Will we see asset managers allocate even more to Bitcoin if it's part of a government-backed reserve?
Yes, and actually we see that now. One of the hats I wear at Bybit is head of institutions. And I think I mentioned that last year, half of our institutional clients actually, of all 6 years history of Bybit, all signed up last year just to get ready for this. So I would say they're getting ready. They haven't really pulled the trigger in size yet, but people are getting ready for this.
Great. Okay, so let's just take a look at the chat box. There are a lot of people asking questions. So someone asked, could a US crypto reserve inadvertently centralize control over decentralized assets like Bitcoin? And how would that impact crypto's core ethos?
I'll answer that quickly. That's not the way Bitcoin works. Unless you control the mining assets, you really don't control Bitcoin. And even if you did have the mining assets, it's almost impossible for someone to get access to all that energy. So I don't think that decentralized nature of Bitcoin can be controlled that way.
Dusty, what do you think?
Yeah, to add to that, I think indeed this becomes more an interesting point when the last Bitcoin is mined. Because right now, I'd say even the biggest miner is what? Tether, probably. And I think it might become a more interesting discussion when really people start mining more so for keeping the network alive versus rewards. But as of this point, economically, it doesn't really make that much sense for them to try. There's a few ways in which they perhaps could, but again, it doesn't make too much sense just quite yet. But maybe over a longer time, when computers get a lot better, there could be an argument to be made. But I feel as at this point, there's almost no way in which they could, or where it poses an extra risk. I wouldn't say that, no.
Looking at the chat box, someone also commented on Dusty's comment. This person said, I feel this particular situation is a double-edged sword, which can be good if properly utilized. Do you agree?
Yeah, for sure. Both sides could be very good. Both sides could be very bad. It always depends in that sense.
Okay, keep those questions coming, guys. We'll just move on to the next part first. But also a friendly reminder for all of the viewers on the line, the first round of red packets for all Bybit users are fully claimed, but do stay tuned for the second round for the new users. All right. So one of the biggest questions people have been asking is why these 5 cryptos. Bitcoin is an obvious choice, but Ethereum, Solana, XRP, and Cardano all bring something unique to the table. Some traders were surprised by the picks, while others think this could set a stage for which assets institutions take seriously in the future. Do you think the government is hedging its bets across different blockchain ecosystems, or is the selection more about what's politically and legally convenient for regulators? Dusty, would you like to take this one?
Yeah, so ultimately we will not know. We will not know exactly what the reasoning is because they will not say. So in this case, we do not know exactly what a Cardano, a Ripple, or Solana has discussed in the background. And there's also discrepancy between the ones that were mentioned in the reserve versus the ones that showed up at the White House. Again, what was discussed, what was already negotiated perhaps, or what the discussions look like. And since we do not know anything, it's pure speculation to say, oh, maybe the US wants to do this, or maybe there's an incentive, maybe there's a sort of, let's call it a fee or a licensing fee or a proposed donation of sorts, which makes this more viable to get these coins in. It could be, for example, that it has more to do with these previous lawsuits where, again, somewhere in there was a discussion had already, again, talking maybe a year ago, for example, maybe some months ago, where it was stated, you know what, if you change your policy, we will be happy to give up a part of our treasury to the United States government. Just like now Trump said with TikTok, whoever buyer wants to come in, if we do not give you the license, TikTok will be worth 0. If we do give you the license, it's worth $1 trillion. Come in, buy it, give us half. I'm thinking perhaps there are some discussions like, I'm not saying there is, I'm just saying it could be discussions like that had with some of these US-based cryptocurrencies where, again, it might be a wise idea to adapt them in this reserve because they might get a lot. But it could also be they just want to be supportive and end up not going for any, but just to sound supportive. It's hard for myself to say.
Okay. And the selection of Bitcoin for the reserve is unsurprising given its status as the pioneering cryptocurrency. How does this endorsement by the US government affect Bitcoin's narrative as digital gold and its potential role in traditional financial systems? What do you think, Shunya?
Well, I think the way it needs to work is that you already have this. It's already sort of acting like digital gold. If you look at, when people trade, they need to put collateral, right? So the most preferred collateral is absolutely cash and then government bonds. And if you look at our crypto exchange, Bitcoin is a very strong collateral. A lot of people use it. And now because it's wrapped, actually, if you could look at a lot of traditional exchanges, you could actually use like a Bitcoin ETF and use that as collateral to trade everything else. So it's already happening. And it was not really the U.S. endorsement. It was the fact that it could be held in custody, and so if you think about, we talk about RWA, right? It's like taking real assets and letting it tokenize. But actually, an ETF is the old school way of RWA, and it's already happened for Bitcoin for TradFi firms, and it's working.
And okay, so I've seen this question in the chat box as well. So stable coins like USDC and USDT weren't included in this reserve despite playing a massive role in global crypto transactions. Why do you think the US left them out? Could this be a sign that stable coins are viewed differently by policymakers? Dusty?
So I think for now, leaving them out was a wise decision, maybe because I'm thinking they got to figure out exactly how Tether, how Circle are done in the background, so to speak. I mean, there was some scrutiny against Tether, for example, not too long ago. I'm not so sure how much scrutiny there was against Circle. But so from that angle, maybe it's not wise to name $1 as a strategic crypto or digital asset reserve. I believe in some earlier statements, it was mentioned that they were going to be in there. And I still think eventually they will be. But again, I think actually this does give a little extra benefit to this, what you just mentioned, this as a store of value for Bitcoin. I think it does help. Then again, I'm also thinking about it. The way they just went for Bitcoin mostly in terms of pressure might also be because they already have a ton of it. And so it's an easier argument to be said along the lines of, well, we just keep it. We just don't sell it, and we hopefully see the value accumulate over time. Whereas with these stable coins, they'd have to take US dollars, convert them into the US dollars of a company, in this case, maybe a Tether or Circle or some other one, maybe an RLUSD. But how is really that a good value proposition? You're supporting this whole narrative, sure, but it doesn't really make sense to start with that, I'd say. Because again, if you're not supporting the rest of the ecosystem, why do it? What's the point? Again, what network would it be on as well? Because that would be yet another vouch. And so when you start thinking about that, maybe this is, again, a few steps more in when you do establish first which other cryptos to have in your base, I'd say.
That's a good point. Looking at the chat box, there's also another question. Does this mean that there's a chance that political players can influence the liquidity pool of cryptocurrencies?
Yeah. Well, from my perspective, I mean, oh yeah, I'm not sure. You would answer.
You can take
No,
it.
no, you can take it first. I think it's a Jigsaw question.
Political players can influence liquidity pool. Theoretically speaking, they always can, because again, if a Trump decides to say, hey, we want to stack it up, they can take a lot of liquidity out by never letting it outside of their own bubble, just like a BlackRock, for example, could now do, and like any major player could do. By taking it away from the public, even through OTC, doesn't really matter in that sense. If it stays within their own ETF bubble, doesn't really go out. Theoretically speaking, it dissipates. Dissipates the right word? I don't know. It takes away liquidity from the traditional, the main exchanges, the main platforms. Not sure if it's necessarily bad. You might say it actually squeezes our prices up potentially, just because of some funny ways. But it will obviously play a role. It could play a role. I think that was the question. Could political players influence it? They could. A question is how much should be allowed and how much will it? But I think for sure, if the question is can it, then yes is the answer. Maybe she had as a different answer.
Well, actually, Dusty has the right answer, so I'm going to echo yours.
Okay. And here's another question. How will the creation of a crypto reserve affect the interaction of crypto and fiat currencies? Will cryptocurrency become closer to traditional financial instruments? In other words, how much does this bring closer the moment when I can pay like via crypto in the store? Yeah. Okay, we'll tackle the first part first. How will the creation of a crypto reserve affect the interaction of crypto and fiat currencies? Will cryptocurrency become closer to traditional financial instruments?
Well, I don't think that, I think I mentioned earlier, this isn't the reason why it becomes closer. It'll become closer when more and more people adapt crypto assets, and maybe they don't want to sell it, and exchanges or other, our competitors make the linkages better, and that's the thing that makes it closer together, not because it's a strategic reserve.
And okay, so are there notable cryptocurrencies that you think were excluded from the reserve that you believe should have been considered, such as those with significant market caps or unique technological features? Dusty?
No. No, the simple answer is
okay.
No, there is an argument to be made that many others could be involved, just like, for example, now how World Liberty 5 from the Trump guys are buying up different assets. I mean, he could make an argument as to why any US-based currency could play a role. But then I'm thinking, from my own perspective, already including so many at an initial proposal is quite wide. And there will be a lot more scrutiny against that, a lot more pushback versus starting it slow and expanding upon it later. Because I think the argument with Bitcoin, as in you already have it, is just we don't want the value to be lost anymore, like how it just happened. And then maybe add upon it, because again, we've seen how the price has gone over the last 10, 15 years, whatever. Let's not waste that again. But with any other asset, like I just said earlier, what are the risks, I think was a question. It just keeps exponentially stacking for every single crypto you add. And so again, there's a ton of different cryptos that World Liberty 5 holds as well. There's a good argument, but every single one of them adds so much more risk. When is that worth it? When is that a smart idea? So if you're asking me, should one have been included before? If not a stable coin, which again, there's a ton of different questions for, then I personally also would not know which one would be making sense. I mean, maybe anything that's already had some ETFs approved of sorts, or that at least have a lot of filings in there. But even then, well, would you only want US-based coins to start off with because it's easier of a sell? Or would you only want coins that have tons of liquidity or are more decentralized? I don't know.
And Shunyet, do you have?
Well, I think it was the right list. There was, two. I think stable coins was taken off, I think, for good reason. Other one, I think, is sort of an exchange utility token. I don't want to mention the name, as you guys might guess why. But I think, that makes sense. You don't want to favor an exchange. So I think that the rest of the list actually makes perfect sense.
Okay, great. And now that we've seen a government-led crypto reserve, does this open door for central banks to eventually hold Bitcoin or other cryptocurrencies as part of their balance sheet? Or is there still too much regulatory and liquidity risk for that to happen? What do you think, Shane?
Okay, so if you look at the central reserve bank, usually it's to deal with balance of payment, and the central bank usually actually doesn't even hold like actual physical assets. It's usually foreign currencies. So until governments pay each other in cryptos.
Mm-hmm.
Maybe it might in the future, like, there's like this SDR that's sort of like a basket of currencies. If that comes into play, and if all of a sudden, like, maybe Russia and China decide to settle their trades in Bitcoin, then actually that might make sense. But until that happens, I don't think the central bank will be holding it.
Okay. And if these 5 selected cryptos become the default institutional blue chips, what does that mean for the rest of the market? Are we heading toward like a 2-tier system where some cryptocurrencies are seen as safe and others are left behind in some sense? Dusty, maybe.
Well, but again, we're now talking about one country saying that these cryptos then are good or bad. So I don't think it's going to happen that way. Again, the market can decide. But I think that would be placing too much emphasis on just the US alone. If they decide 5 cryptos are good, but the UK, for example, says none of them are good, then which ones are good, right? Is it none or is it 5? And so it's going to be a matter of what is going to be mostly accepted around the world. I do believe, though, if they, again, vouch for these, let's say 5, I'm not sure exactly if it's 5, it will have a little bit of an extra effect for companies willing to adapt or willing to create products around it, sure. And it could be a big vouch for them. But I don't think that would necessarily make a tier system just quite yet. Again, like you just mentioned, one of those exchange tokens, I don't think the price of that or really the utility of that will differ so much based on not being in this list. And I think the same thing can be said for many other utility tokens or things of that sort.
Okay, quick question from the audience. Would this move make Bitcoin safer as an investment, or does it bring more risks? Dusty?
Well, does it bring more risks? Well, maybe perhaps manipulation risk. You could add that the bigger the players are in your pool, so to speak, that the heavier the water might flow. And so from that perspective, it could get crazier. On an opposite angle, the more or the bigger the players are, so to speak, the more scrutiny, the more eyes are on it. And so the less malicious players, for example, could get away with. So from that angle, it might get safer. From another angle, again, if you're now up against the government for deciding the prices, so to speak, because they're also buying up, or maybe they're selling at certain points, and again, this might be in their policy, then yeah, it could get a lot more volatile or crazy because maybe people will speculate on when exactly those guys would sell or buy or make announcements. Whereas before, it might just be your own little bubble. And now that bubble has expanded significantly. And it could also be, for example, the Fed announcement just yesterday, a lot of volatility around that. If it was a very small announcement or nobody cared about it because it's a small thing, the price would move. But again, if there's a lot of eyeball on it, yeah, the price might also move more.
Great. Like I said just now, keep those questions coming, guys, and then we'll get to them shortly after. So the US government's announcement of a crypto strategic reserve initially triggered a sharp rally in the 5 selected cryptocurrencies. However, this euphoria was short-lived, with prices giving up gains due to broader market factors, including macroeconomic concerns. Despite this pullback, this move has long-term implications for crypto markets, regulatory sentiment, and institutional adoption. Traders are now evaluating their next steps, like whether to buy the dip, rotate into other assets, or take a more cautious approach. So with the crypto market still highly reactive to regulatory signals, economic policies, and liquidity flows, let's take a look at what are some of the smartest ways to navigate this shifting landscape. So like I said, the market initially pumped, then erased those gains soon after. So does this tell us that traders should be more skeptical of government-driven crypto narratives, or was this just a classic buy the rumor, sell the news kind of event? Shunya, what do you think?
Well, I think it is important news, right? I think the whole Trump getting elected was huge news for the crypto industry. This was important to the crypto industry. I think people just overestimated the effect, and then it came back. So I don't think it takes away from it. And markets are very fast and efficient. Yes, it pumped and it went down. How do people play this? I mean, Bybit has a lot of crypto derivative products that perps, futures, options are ways to sort of play into this game or hedge against the relevant risk.
Okay. And, historically, government adoption of an asset class stabilizes its price over time. But given the rapid price swings we've seen, do you think traders should be bracing for more volatility before that stability kicks in? What do you think, Dusty?
Yeah, I do believe so. I do believe from any angle that to get towards the stability, there needs to be a lot of volatility first. And I think it depends on when you think another exponential wave, if at all, would come? Do you think the 4-year cycle, for example, for Bitcoin has been broken now that the institution, or the major institution, I guess the US, has come in? Or do you think it still will happen in a sort of similar way where somewhere you go exponential, which perhaps we have seen, perhaps not? If you do say we've deviated from that, then there is going to be some crazy volatility now still, which perhaps might only start happening when the US makes another announcement. If you say we have deviated from it, perhaps this indeed is the time where we start being more and more stable from here on forward, based on the fact that the craziest announcement ever, the president launching a meme coin, for example, or things of that sort have already happened, there's also an argument to be made. But I still stand by the first one, which is crazier times still to come.
Yeah, we have to brace ourselves for it then. Just bringing it back to what Dusty mentioned earlier, liquidity is a major driver of price action in crypto markets. So with the US government now officially holding Bitcoin, you mentioned that it could reduce circulating supply and create future price squeezes, but is it possible that it could also be like an eventual liquidity boost? What do you think, Shunyet?
I don't think it would boost liquidity. The only thing that happens is that because the U.S. government do this, there's more institutional adaptation. And actually, institutions, unless they're like market makers or hedge funds, usually trade a lot less than retail. So you would get, longer term, probably lower volatility.
So is there a chance for like price squeezes in the future?
Well, yeah. So price squeezes usually happens when there's like, a short burst of liquidity that disappears, and one player or another can force it in one direction. I think crypto liquidity has actually only gotten better and better, even with institutional adaptation. So I think once it maybe becomes very mature, we could have that. But right now, the adaptation is that more and more people are involved. I mean, even my family relatives are actually looking at crypto, and that builds on liquidity.
Okay. And this announcement put 5 specific cryptos in the spotlight. So should traders consider reallocating their portfolios to increase exposure to the cryptocurrencies included in the reserve, or does this create an opportunity for traders to rotate into other overlooked altcoins that might benefit from increased institutional attention later on? I just wanted to let you guys know that this is not meant to be financial advice. We're just discussing everything for education purposes. What do you think, Dusty?
Well, yeah, actually, I made a video on that yesterday because my thoughts, I hadn't really made up my mind for the last few weeks, I'd say, as to whether or not these US-based coins, or specifically the 5, would be a good idea. Still, as of this point, nobody knows for sure. Never, actually, nobody knows for sure. But my thoughts now are more along the lines of, there's a very high probability that the coins that were mentioned will get some sort of new boost in the near future. My own personal opinion. There's a slightly smaller chance, but still quite high, that more US-based coins are going to get some sort of announcement, some sort of attention piece, and that they are worth at least looking into. At least taking a look at which coins they are. There's a lot of beautiful graphs and sheets. And again, another amount that might be a bit overlooked is coins or players or people that were allowed to come to this White House summit. Again, why were they there? What did they discuss? Perhaps those are interesting coins to look into. And it's just, again, from the perspective of, you have millions of cryptocurrencies now. Since Pump Fund came around, there's a ton more. Which ones are worth your attention? And you could say, oh, yeah, but utility, this, that. There's always a counter argument to be made as to why it might not be the right phase. It might this, that. The only thing we know for sure is that the US just made an announcement of 5 different cryptocurrencies. Again, you might differ in saying how important the US's opinion is. I think it's quite important. We know those 5 were mentioned. We know that they put an emphasis on US-based cryptos, and stable coins were not in there just quite yet. I think if you expand that net a bit, so say the 5 just now, plus a couple of other ones, where again, you see a pretty high probability of them either being at the White House before, or them having a logical connection with maybe a lawsuit in the previous few years that was now dropped. Those might be interesting to look into, purely because what is the probability that they'll get back on this? I think is pretty high. But again, my personal opinion on that.
Yeah, thanks. And Shunyet, do you agree?
Well, of course, I think it depends on what kind of investor and trader you are. So there's a standard now that says these are the US tokens that are important. I mean, it's sort of like, if you're an investor in stocks, there's the blue chip stocks and there's other chips, but is the blue chip that's actually outperformed? I mean, if you look at the last cycle, it was AI stocks, right? And if I said, oh, I love blue chips, you do blue chips. I like AI, that was the theme. So there's also themes in cryptos and in the whole crypto industry itself. So I don't think that makes a difference in how you should judge what investment should be.
Okay. And the crypto market remains highly sensitive to macroeconomic events. How should traders balance short-term plays versus long-term positioning for regulatory adoption?
Okay. Well, once again, this sort of looks like your risk appetite. I'm a full believer in crypto assets. At least the thing is, I don't know which one. And there's some big ones like the US that sort of blue chip. I would probably, be holders of certain crypto assets that I'm firm believers in, and the rest more thematic. And I might, just trading that using, various derivative products, and the other ones I just like sit there and hold them. It's the way I would play it. But every investor is different, and this, once again, not financial advice. So.
Yeah. I mean, if you would like to learn more, you can also check out our Bybit Learn website. We have tons of articles on trading, on investing, on strategies that you can take a look at before you start your trading journey. Yeah. So what are some practical hedging strategies that traders can use? Are options and perpetual futures like a good play here, or is this more of like a long only game?
Okay, this looks like a sales job, but I think you sort of understand the product. So I think the perpetual product in the crypto world is the most popular one. It has the leverage. It's across all tokens that are available. I think options takes a higher learning curve, but it's a more, I would say, sort of sharp tool where you could directly hedge every type of risk you want, whether it could be, volatility, and you don't get liquidated options. So it is a better tool, but it's a much harder tool to wield. So I think, as most people get in the crypto industry, they usually buy spot or they use perps. I think that's a good way to enter as the options market becomes more mature. And people who are users of these tools and understand them, I also recommend options.
What about you, Dusty? What do you think?
I agree to the fullest. It really depends on who you are, how you trade, what you like. There's indeed option strategies for nearly any single scenario you can think of. But again, for a beginner, is that something to start out with? I don't think so. But what was the core question again?
What are some practical hedging strategies that traders can use?
Yeah, no, there's so many thousands of them. So if we're talking, where to get even into this, right? I'd say it depends on what type of trader you are. I don't even know where to start.
Okay. With increased government involvement in crypto, are we heading toward a market where Bitcoin and these reserve cryptos behave more like traditional assets? If so, how should traders adjust their strategies?
Okay. I mean, you wouldn't say they're traditional assets. I think, as things become more adapted with institutions, I think I mentioned earlier, volatility long-term might go down. Unless there's like some macro information, and now we see that the cryptos, at least the big ones, are very tied to the general market in general, whether it be interest rates, currencies, everything else. So it's become the big boy.
Okay, and is this the kind of news that traders should buy on dips, or does it make more sense to wait for confirmation from institutional flows? Dusty, would you like to take that?
I think in general, not financial advice, I think in general, it's always best to just have time in the markets versus timing the markets. I think it's, my opinion, always wise to just buy the dip and continue on. Never in the history has it been a bad idea for, again, if we're talking the major asset, Bitcoin, or a couple of ones on the top. So from that angle, I personally think if you're going to wait for that institutional thing, you might miss it. You might buy it completely the wrong spot. Whereas if you just continually buy, maybe TWAP it, maybe just continue over time, you end up being in the best spot, or at least on average, I think you're in one of the better spots.
And I suppose, Trinidad, you would agree.
Yeah, I agree. I mean, institutions have more money. It doesn't mean they're going to be right in the long term, right? And if you have a proper strategy and you have belief in it, then what Dusty said makes perfect sense.
All right, let's just take a few questions from the chat. We've covered a lot today, like the U.S. crypto reserve, market reactions, and what it means for traders. So let's hear what is on your mind. Okay, so someone actually asked, They said that they will consider budget neutral ways of acquiring crypto without costing taxpayers. What methods could they use to buy more crypto?
Oh, okay. So what they mean by budget neutral means that, let's say it's seized assets. Let's say they seized jewelry, gold, paintings.
Mhm.
They could use that, or even smaller altcoins that was part of a, let's say a drug dealer's wallet. They could use that to buy maybe one of those top 5 tokens or more Bitcoin. I think that's what they meant by budget neutral. That you're not going to raise money just to buy the cryptos, but whatever seized funds can go to those. I think right now, most of the time, I think for gold, sometimes the DOJ has a fund where they decide what to do with it. Sometimes they don't sell the gold. And for the other assets, most of the time it's an auction or it gets sold off. So I think what they mean is that in the future, if it gets sold off, it could be, we'll just park it instead of just US dollars, we could park it in one of those 5 assets.
Okay, I think this person didn't catch some of the parts that you guys mentioned earlier, so that's why question. Maybe you could just explain it again. How do you think? What will happen to the volatility when cryptocurrencies become state property? Dusty, would
I
you
think
like
she
to
had a better answer actually than mine.
Yeah, I think longer term volatility goes down as more institutional players get involved.
Okay, let's see. What other questions do we have? Okay, someone actually made this comment. I believe this is a huge opportunity for altcoins to step up and claim their places in the crypto market. Whatever happens, I pray it is positive for us. I'm sure that everyone. Yeah,
That's not a question, though.
yeah, it's a great
I like
comment.
that. Optimism. Whoa! Makes me want to jump in the pool right now. Oh, sorry. No, you put me on the big screen just now. No, but that's exciting. I like the positive attitude. I mean, market's been down a bit, and a lot of people get so negative and desperate, I'd say. But this is what I like to see. Positive comments. That's nice. That's good.
Yeah. Do you think there's a lot of FUD right now, actually? Like with the market being quite
So
volatile?
much. It's crazy. Yes, we're not down that much. Then again, altcoins, many of them are down 80%. So I do get some of that pessimism. But for Bitcoin wise, we're not down that much. I think right now 86K or something like that. It's not that bad.
Heard a bit, yeah. Okay, let's take a look and see if there are any other questions. There are some people who are very excited to see Dusty here. Can see what else. Okay, maybe just this question this person actually asked. I suppose, Shunya, you can answer it. How do you get a Bybit card?
Oh, that's on the website. You apply for it. You need to be in one of the jurisdictions where we do support Bybit card. I actually use it all the time. And it's quite good if you are a VIP member because it gives you rewards back.
Like what are some rewards you can get?
I usually just get cashback. I know you can get other stable other tokens. Yep.
Yeah. And actually, we also have like a reward program. Yeah. So all the points that you accumulate, you can actually exchange them for rewards, like
other tokens or stable coin.
Isn't it also like Netflix or stuff like that free if you have the card?
Yes, Netflix. I think ChatGPT.
Oh yes.
Spotify.
Yeah.
Really? ChatGPT. Okay.
Yes.
I didn't know that. That's pretty good. All
The
right.
$200 version. If you are a certain VIP level, I don't know the exact VIP level, but
okay.
All right. That's pretty cool. I use it all the time. Actually, the card is so useful. That's a funny thing. You don't realize that it's so convenient that now because people always say, "Oh, but I prefer to pay in crypto," especially US people, for example. They just say, "Oh, I just have the card." It's like so easy. But I sometimes forget that many people don't have one of these cards yet. It's kind of a funny thing.
Okay, I think that's all the questions that we have for today. If we didn't get to your question or if you have more to say, we do want to hear them. Please join the all-new Bybit Learn community. It's the perfect place for you to share your insights, debate key topics, and even post your own market analysis. Whether you have a strong take on today's topic or you want to see what other traders think or just enjoy discussing crypto, this is the place to do it. And the best part is you can actually earn rewards while contributing. every time you engage, whether it's posting, commenting, or sharing your analysis, you rack up points that convert into real rewards. You'll get to win a share of the 2,500 USDT prize pool each week. And yes, the leaderboard refreshes every week, so you get a fresh new chance. So if today's discussion got you thinking, head over to the Learn community, join the conversation, and start earning while you're at it. All right, so let's just wrap things up. Big thanks to Dusty and Shunyet for sharing their insights today. It's been an awesome discussion. And of course, thanks to all of you for tuning in and being part of the conversation. As usual, please note that none of this is meant to be financial advice, and the topics discussed are purely for educational purposes. For more information, please visit our Bybit Learn website, and don't forget to connect with all of us on social media. We also have some exciting new projects that are coming up on Bybit, so just keep a lookout. Lastly, let us know what topics you would like to hear more of, and we'll see you at our next live stream. Thank you, and see you again. Bye-bye.